Friends, today we are going to talk about the book that has helped millions of people understand that money in the stock market is made not by luck, but by a system. Today's video is not just a book summary, it's a deep journey into the thinking that made thousands of investors in America millionaires. William J. O'Neill's most powerful investing book in the world, How to Make Money in Stocks. And friends, if you only want to learn one stock market system that will change your investing and trading mindset, this video is GOL'd for you. Why do most people lose in the market? O'Neill says that most investors do what the crowd does. The crowd buys a falling stock, considering it cheap, and leaves a rising stock, considering it expensive. The crowd invests based on news and tips. The crowd sells in panic and buys at high prices due to the fear of missing out, FOMO. But professional investors, they don't follow the crowd, they follow the charts. O'Neill says, your job is not to follow the crowd. Your job is to follow the price and volume. This means the real truth of the market is, price never lies. Where is money made in the market? People think that the stock market is a game of buy low, sell high. But O'Neill says this is absolutely wrong. Real money is made in rising stocks because a rising stock maintains its momentum. Cheap stocks are cheap for a reason. Strong stocks go higher because institutions buy them. The world understands this point very late. Charts, your X-ray. Just as a doctor cannot see inside a patient without an X-ray, an investor cannot understand the market without reading charts. Charts tell you where money is being accumulated, which stocks are seeing increased demand, in which stocks institutions are quietly accumulating, which stock is giving a genuine breakout, and which is just a trap. Reading charts means reading market psychology. That's why O'Neill repeatedly tells the world, learn to read charts. They are the footprints of money. The world's most powerful investing model, Can Slim. Now friends, the real game changer begins here. Can Slim, a word of just 7 letters, but this word teaches you to identify the world's biggest wealth-creating stocks. Can Slim is not a prediction. It is a scientific pattern derived from the study of 100 years of the most successful stocks. O'Neill and his team analyzed 100 years of charts, earnings reports, breakouts, crashes, recoveries, everything, and found that every multi-bagger stock had 7 common factors at the beginning. The names of those 7 factors are C. Current earnings. A. Annual earnings. N. New. S. Supply and demand. L. Leader versus laggard. I. Institutional sponsorship. M. Market direction. These 7 factors are not just rules. They are a map that takes you from good stocks to great stocks. But remember, Can Slim is not a shortcut. It is discipline. It is a process. It is a mindset. Now comes the biggest truth. Why do people lose money? O'Neill explains that the loss in the stock market does not start with choosing the wrong company, but with choosing the wrong mindset. People buy on a fall because they think, now it will go back up. But charts say what is falling can fall further. People sell at the top because they think it has gone up too much now. But charts say what is strong can become stronger. It is in this psychology that 99% of traders and investors get trapped. But O'Neill gave the world a new way of thinking. Buy strength, not weakness. Buy breakouts, not breakdowns. Buy leaders, not laggards. This thinking turns a normal retail investor into a powerful smart investor. Now starts the real deep dive, Can Slim's first part. C equals current earnings. But we will understand this in detail and depth later. How to identify real winners. How to scientifically catch a breakout. Which companies create millionaires. And how charts and earnings signal together. Friends, we have understood O'Neill's philosophy. Don't guess the market, observe it. Don't buy cheap, buy strong. Don't ignore the chart, follow it. Now we deep dive into the system that made thousands of normal people millionaires. Can Slim, we will now learn its most critical components. C equals current earnings, the first and most important condition. O'Neill says, strong stocks are born from strong earnings. Current earnings means how is the company's current earning growth? O'Neill's research says that in almost every superstock for 100 years, earnings growth was between 25% and 500% when it started its big rally. Meaning, just a good product is not enough. Just a brand name is not enough. Just a low PE ratio is not enough. The real game is, earnings growth must be exploding. Your filter should have these values. Checkmark EPS growth, 25% or more. Checkmark sales growth, 20 to 30% or more. Checkmark profit margins, increasing checkmark. The company should show consistent improvement in quarterly results. If both the company's earnings and sales are growing rapidly, this is a direct signal. Institutions are about to accumulate this stock because large funds only buy those stocks whose future is bright. A equals annual earnings growth, a minimum of 3 years of record. O'Neill says a one-quarter jump can be temporary, but 3 years of growth never lies. This is the reason why, in Can Slim, annual earnings growth of 25% or more is a compulsory rule, meaning the company must be consistent, earnings must be stable, its business model must have strength, and most importantly, the CEO and management must be strong in execution. All top stocks of the last 100 years, Apple, Google, Amazon, Home Depot, all had explosive annual earnings growth for 3 to 5 years before their big rally. N equals new, the most powerful ingredient. The most explosive part of Can Slim is N. N means something new. Checkmark new product. Checkmark new technology. Checkmark new industry trend. Checkmark new management. Checkmark new company turnaround. Checkmark or a new price breakout. Every multi-bagger stock has a new factor. Examples: Apple's iPhone, Netflix's streaming model, Tesla's electric revolution, Google's search algorithm, Meta's social network. O'Neill says, new is where the growth comes from. If a company has launched something new that can change the market, the price does not react immediately, but charts start giving a signal as early as possible. Therefore, O'Neill says, when something new shows up, pay attention. S equals supply and demand, the law that never breaks. No matter what people say, the real power driving the price is only demand and supply. If the demand for a stock is increasing, the price will go up. And why does demand increase? Because institutions buy. O'Neill explains that top winning stocks usually have a low supply of shares, meaning companies with low outstanding shares tend to surge quickly. And this is the reason why small cap to mid cap growth stocks become the biggest multi-baggers. You need to look at checkmark. Are outstanding shares low? Checkmark. Is volume increasing? Checkmark. Is the breakout on strong volume? Checkmark. Is an accumulation pattern visible? Volume spikes equals institution shopping, meaning on days when volume suddenly increases, smart money is active there. L equals leader versus laggard. Be a leader, not a laggard. O'Neill says, the world chases cheap stocks, but money is in leaders. Leader means the fastest, strongest stock in the industry. Laggard means a stock that has been left behind. People buy laggards thinking they are cheap, but laggards rarely become leaders. The market only rewards winners. Therefore, you need to look at checkmark. Which stock has the strongest price? Checkmark whose relative strength, RS, is the highest. Checkmark, which is trading near its 52-week high? Checkmark, which is moving faster than all its competitors. O'Neill gives a simple rule: buy the strongest stocks in the strongest industries. I equals institutional sponsorship. No rally is formed without institutions. This part is critical. O'Neill says that no big stock moves until large funds accumulate it. Institutions like mutual funds, pension funds, hedge funds, insurance companies, banks, they have thousands of crores, and they create the real price movement. If a company has at least 10 to 15 institutions invested and their buying is increasing every quarter, then this is a signal that firepower is coming into the stock. M equals market direction, the most important factor. O'Neill's most essential rule: even the best stock cannot fight a bad market. Meaning, if the entire market is falling, even your best stock will not be spared. Therefore, the most critical step in investing is checkmark. Is the market in an uptrend? Checkmark in a correction? Checkmark sideways? Checkmark. Is the rally starting or ending? That's why O'Neill says, don't argue with the market. Follow the trend. Now let's talk about breakouts. Where is money made? Every successful stock has a special pattern, cup with handle. O'Neill was the first to scientifically explain to the world how true breakouts look, how to identify weak breakouts, how to avoid false signals, and most importantly, what is the buy point. In the next section, we will deep dive only into breakouts, chart patterns, buying points, selling rules, profit taking, stop losses, the complete advanced system. Friends, now things are going to get more intense and practical. The next part is the most powerful section of this entire video. If you are ready, then write, Radhe Radhe. Friends, now it's time for the most important part of this beautiful and power-packed summary, where William J. O'Neill teaches us how to buy at the right time in the stock market, how to sell, and how to keep our growth consistent. This is the part where the real money is made. Let's start. The most crucial part of Can Slim, timing the market. O'Neill says, if even the right stock is bought at the wrong time, the result is zero, meaning timing is everything. Reading market trends, the M in Can Slim. The market moves in 3 phases. Uptrend, the most money is made here. Leading stocks break out. Volume increases. Institutions buy aggressively. Major indexes like Nifty/Sensex continuously make higher highs. In this phase, your biggest responsibility: only take a position in the strongest stocks. Downtrend, Money is lost here. Continuous decline in the market. Stocks with weak earnings crash. Volume shows heavy selling. The index makes lower lows. In this phase, O'Neill's golden rule: cash is a position. No matter how tempting the market seems, do not invest. Sideways/corrections. The market remains confusing. Stocks show changing trends. Fake breakouts occur. Institutions are in a wait-and-watch mode. In this phase, patience is your superpower. Perfect buy points. Breakout strategy. William O'Neill gave the whole world a new method: buy high and sell higher. This sounds wrong, but it is the stock market's most tested strategy. Ideal buy zone. The most powerful buy point. Breakout above resistance. Volume at least 40 to 50% above average. The stock is making a new high, not a new low. The price is breaking out from a proper base like cup with handle, double bottom, flat base. Example, conceptual. If a stock repeatedly stops between 100 to 115 and suddenly breaks out to 116 to 118 with volume, that is your perfect entry. Golden rules for selling. The fewest people know this. Loss in the market does not happen because people buy the wrong stock. Loss happens because they do not sell at the wrong time. O'Neill gives 3 rules for selling. Rule number 1 to 7% to 8% stop loss. If the stock goes down 7-8% right pointing arrow, you must sell without thinking. Why? Because a big fall starts with a small fall. Your capital is saved. You are ready for a new, correct stock. 90% of beginners ignore this rule and lose capital. Rule number 2. Sell into strength. When your stock gives a plus 20% to plus 25% profit and the market is at its peak, right pointing arrow O'Neill says take the profit. This is where smart money is selling. Rule number 3. Sell when leaders turn to laggards. If a stock starts showing these signs, falling with volume, institutions start selling. RS line is falling, closing below moving averages. The trend is changing. You should exit before the stock crashes. Portfolio building. O'Neill's method. Beginner's mistake. Buying 10 to 15 stocks. Investing a little capital in every stock. This method never creates wealth. Checkmark, according to O'Neill. Best portfolio. 3 to 6 high-quality stocks. Why? Diversification should not be excessive. Focus on the best stocks is essential. Institutions also make concentrated bets. Risk remains manageable. Growth is accelerated. Position sizing. How much money in which stock? O'Neill says, highest quality stock equals highest allocation. If you have 100,000 rupees, strongest stock right pointing arrow 30,000 rupees. Second strongest right pointing arrow 25,000 rupees. Third right pointing arrow 20,000 rupees. Keep the rest in reserve. Don't put money everywhere. Trading psychology. Winning mindset. The stock market is not just numbers. It is a mental game. O'Neill says, beginners buy cheap, falling stocks due to fear. Professionals buy expensive, rising stocks with confidence. Losers keep hoping that it will come back up. Winners follow rules with discipline. The winner's formula. O'Neill's secret is simple. Choose the best stocks. Enter at the right time. Cut small losses. Protect profits. Follow the market trend. If you sincerely do these 5 things, the stock market becomes an ATM for you. That's why O'Neill's strategies are still followed by the world's top traders and investors. Conclusion. What is the lesson from this book? How to make money in stocks teaches us. Risk management is the real superhero. No investor can be successful without discipline. Trend is your friend. Reading a chart is a skill. Market psychology controls everything. Choosing the right stock is not easy, but possible. Can Slim turns beginners into pros. And most importantly, money is made in the stock market by strategy, not by emotion. If you practice this strategy for 6 to 12 months, your way of looking at the market will change forever. Friends, this was the long, deeply explained summary of William J. O'Neill's world-famous book, How to Make Money in Stocks. If you have listened carefully and reached this point, believe me, you are already ahead of more than 90% of investors. Because knowledge is the real power. And today you have learned how to choose the most powerful stocks, how to make the right entry-exit timing, how to keep losses small, how to protect profits, how to read chart patterns, and most importantly, how a winning trader mindset is built. Remember, the one who wins in the stock market is the one who learns and then applies. Success does not come just by listening, but by taking action. Your whole life can change. If you found this video helpful, powerful, and informative, then do like it, because your one like inspires us to bring such high-quality summaries. And if you want us to create deep and practical summaries of other legendary books like Trading for a Living, High Probability Trading, Millionaire Fastlane, Rich Dad Poor Dad, Market Wizards, then comment more trading books, because your comment tells us in which direction you want to grow. If you are new to the channel, then do subscribe and press the bell icon so that you can see such powerful videos first. Thank you so much for watching. We will meet in the next video with a new book, new knowledge, and new growth. Till then, keep learning, keep growing, and always invest wisely.